Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you go, and that starts out with the economic data, see how that impacts the overall markets with some market analysis, finally round it off with some option strategies we could implement into our portfolio based on that assumption that we come up with in our analysis. All right, so without further ado, before you go, smash that like button. And let's talk about the economic data. Not really a whole lot today. It is a Monday, and usually Mondays are quiet for economic data. Real thing is what's happening in the Ukraine, still having tensions there. Taiwan, yeah, China still on the border there. Another thing that's kind of exacerbating the markets is Elon Musk and Twitter talking. There are all kinds of crazy rumors coming out with Elon Musk and Twitter. Let's just get on with the markets. I'll talk about the economic data as we go along here. But with that said, economic data, share the screen, Eric. Here we go. There we are. All right. So crude oil starting to roll over here. We're starting to see some weakness back down into the point of or value area. That's good to see for most folks. We're starting to see some easing of the tensions here. A lot of folks talking about, are they going to start allowing these permits that are for new oil rigs, whether it's in the ocean or fracking operations. There's several of those that are maybe going to be released here. So a lot of folks starting to believe that, hey, we're going to release some of these permits. They're going to start being able to produce more here in the United States. Bonds, folks, I do not see really a whole lot of strength here in the bonds. If there's going to be a bounce, that would be the one time to start looking to sell some covered calls against your bond portfolio, lower that overall cost basis. I don't think that we're going to see interest rates go any lower. It's only going to go higher. So therefore, that's a difference in product, right? So as the price goes down, that means that interest rates are going up here. So if you're wanting to play that, looking for any type of bounce in price, that means that interest rates are dipping a little bit. And that's probably not necessarily going to happen unless we start seeing some economic data really show that this recession is closer and right around the corner than what we're really expecting here. Gold futures making that move to the upside. That's inflationary worries. We would expect something else to follow suit, but it's not. Bitcoin really losing some momentum here at a time where I would expect, if this is going to really be something that has staying power, that it would be reacting very similar to what we're seeing with gold, because it's going to be acting similar to what would be with the dollar then as well, right? VIX trying to make a decision. It looks like it's going to be to the upside here, folks. And we talked about how equities, we're going to see more correction probably in the NASDAQ, these high flyer tech names. If we start seeing some weakness here, no, that's starting to show through a little bit here. We're seeing more of a correction here in NASDAQ as the Dow Jones blue chips are going to be holding on to it. Because think about this, folks, in your own portfolio or just in your own trading, tech is more volatile, and we all have a tendency at about the same time when we start getting angst is let's get rid of the things that have risk. Let's follow through with the things that are less risky. Well, that generally means going from tech to blue chip. And that's exactly what we're seeing here. We're seeing more correction in, say, for instance, especially the NASDAQ, E-mini S&P seeing some weakness here. Dow Jones Industrial Average, while we're off 123 points on the day, really just right back to the point of controls there, where the most time and volume's been spent. E-mini S&Ps went on this correction. We talked about the rotation out of the NASDAQ into the E-mini S&Ps and into the Dow Jones. Well, if we're starting to see some weakness here, again, think about this in your own trading, folks, is if you rolled out of something and bought something new, well, that is still fresh in your mind. You aren't convicted that this, or convinced, or have a lot of conviction that this is the trade that you're going to hold on in your portfolio. So if we see corrections, those are some of the first things we start to see get dumped. And I think that that's going to be what we're seeing here in the E-mini S&P. So risk across the board in equities is to the downside. Gold, I would say risk is to the upside. Crude oil, it's going to be a bit of a toss up here. Later on this week, we will be getting crude oil inventories. That's going to be really key to how we're seeing the supply demand aspect of crude oil. Another thing, we're getting a lot of retail sales. This week, we also get CPI, Consumer Price Index. That's going to be a gauge of how the inflationary pressures are affecting the consumer. Consumer Price Index is whether or not producers are passing that price higher, or the higher prices on to the consumer. And if they are able to do that, that is less of a transitory aspect of inflation. When they passed it on, that means it's going to be there to stay. All right. So it looks like we're going to see that show up here coming through with the economic data that we're going to be getting this week. A couple of things that I was talking about last week was some of the travel and leisure. I was looking like it was going to be a little bit of an upside. We are finding some bottoms there. It doesn't really look that good today. There's no confirmation across the board on those. Some of the other ones that we were looking at were the banks. Banks looking like they could be pretty solid after Friday's confirmation. So banks, I think, are still looking pretty decent. Remember, they're going to be doing very well with higher interest rates. That means they can have more of a margin on when they're loaning out for cars, homes, and things of that nature. So that's usually going to be a positive for the banks. So risk is to the upside in the banks pretty much across the board. Travel and leisure is a little bit iffy. I'd stay away from that. It was looking pretty good for a couple of days there, but still no follow through. So watch out for those types of trades. But I'd say banks pretty solid right now. That's all I got for you guys. This week, we're doing cracking the code to trading options in the webinar. So make sure that you guys are subscribing. Hit the little bell right next to it if you want to participate in these morning videos. I'm not always announcing what time I come in. Just when I find something to talk about, that's when I'm coming in here. So if you have to subscribe, you'll be able to participate. Don't forget to hit the like button and comment. I will circle back around for you folks. All right. That's all I got for you. Other than you can't take that, take it easy.